Crypto markets get decimated as macro risk off takes hold. Short-term holders capitulate over the weekend, realizing massive losses, similar to previous flushouts, as we hit max fear. Option SKEW reaches extremes for puts, signaling that a bounce may be due and some of those short futures holders may need to get squeezed. All this and more in this week's Crypto Insight. Crypto this week. What a week in crypto. Continued macro weakness has obviously decimated the crypto market. We have been flagging, this larger degree correction that was in progress. Was it going to bottom out of 40K? Once we kind of took out 40K and started to threaten 38K, it was really smelling like it had room to go. And obviously it broke, got as low as 33 and a bit, I believe. We've been flagging that this target of 29 to 30K is very much in sight. Okay. And it's looking more and more likely by the day. Now, the correlation between S&P and Bitcoin has also gone up dramatically. Was kind of, as low as 0 last summer. It's kind of oscillating plus or minus 25%, is now up to 65%, right? Meaning that Bitcoin's short-term fate will likely be determined by what stocks do post-FOMC this week. Okay, so I don't expect Bitcoin to do anything dramatically different from stocks. Okay. Now, if we want to look at Ethereum, I've been flagging this sort of 2,800 level as the key level that it had to hold if this thing wasn't going to collapse. And it took that out in dramatic fashion. And we got a nice move down to as low as kind of 2,200-ish. Okay. Now, I had kind of sniffed the potential for that break late last week as flagged to subscribers. And that had led me to hedge out my short put spread that I was running. So I was short of 24 put spread to February expiry. As I was seeing this thing looking more and more likely it was going to break, and the fact that Gamma was just dirt cheap, I just bought some 2,700 puts in Jan to hedge out my risk there, and that saved me basically, right? So we had the puke, and I didn't take any damage basically, right? So that trade ended up being a scratch, and then I unwound both the protective Jan puts and the put spread. I just took them off the table because now that scenario is no longer that high probability for me now. So I'm going to kind of wait and see. Yeah. And the next sort of real area of support for ETH is kind of between 2,000 and 1,750, right? So there's not a lot stopping it from going there basically, right? So that's, if we do get further weakness out of equities, which is very possible, then, that's the area that we should be kind of eyeing up in ETH now. Another reason to be bearish on ETH is that the ETH Bitcoin spread has broken through that key level of support that we were looking at, and is now again has got potential for a sort of 10% more underperformance versus Bitcoin to get back to this support level around 0.059, which you'd expect probably provides some sort of support at least on the first test, right? So that's what we're looking at. So we're looking at if Bitcoin can go back to 30K, that's nearly a 20% down move, which potentially takes ETH down 30%, which would get this ratio down to this support, all right? And 30% in ETH from here is going to be a pretty dramatic move down to about 1,750, okay? So that don't be surprised if that's what we end up seeing before this thing's over, okay? So then if we look at some of the other altcoins, absolutely battered alongside ETH, right? So put the kind of the favorite ones at the minute that people are calling out, like Solana, Avalanche, Luna, FANTOM, all these things are down anywhere between 20 and 35%, right? So if you haven't already dipped your toes into these names, like myself, I'm very small in any of these alternative layer ones. I'm looking at this as an opportunity to put some exposure into these names in this dip, basically, right? I do not think the crypto space is just going to zero. Could it go down another 30%? Clearly it could. But to start dipping your toes into other layer ones that you like and you think are going to have a use case and are going to be around, it's not a bad time to start looking at it, right? That's the way I see it. There's an exchange called Delta Exchange that I'm going to showcase and do some videos on. You can trade Solana options on there. So that might be one avenue to do it. Unfortunately, you can't go very long dated just yet. So that will come. But at the moment, you know, you can do cash covered put selling. You can do short dated call spread or call buying to play some of these bounces in some of these oversold names. So there's all sorts of stuff you can do. Watch out for my video on that. And I'll show that platform. So that's kind of what the technicals are saying to me. If you want to look then at on-chain, so the Glassnode guys have put some good stuff out this week. Top left chart is showing us that obviously the drawdowns, we've just got about a 50% drawdown from the high. That's run of the mill really for crypto, right? You go back 5 years, these type of drawdowns, you know, in 2017, we got around 30% drawdowns. Through the crypto winter, we got 70 to 80% drawdowns. We're looking at a 50% drawdown now, which is similar to what we saw last summer. It's run of the mill in crypto, right? If you can't handle these type of drawdowns in crypto, you probably don't want to be investing in the space. Yeah. Now, if we look to get a sense of, you know, whether this thing's put a bottom in, the top right chart is showing us net realized profit and loss. And I've been flagging this chart in previous weeks saying that it just didn't feel like it's capitulated enough yet. We haven't had enough pain. We hadn't had enough blood on the street to suggest that enough positions have been flushed out that we could actually stage some kind of bounce, right? So now that is no longer the case, right? We had 2.5 billion taken out over the weekend, and that kind of spike down in realized loss is, you know, similar to what we saw in December, in the order of magnitude of what we saw in a couple of times in last summer. So now we're seeing that there's been enough pain, right? Clearly. That doesn't mean it's the bottom, but there's been enough pain. So we could certainly stage some kind of meaningful bounce from these levels if we get the macro environment sort of allow it, basically. Yeah. What else? Looking at the sort of remaining short-term holders, the bottom left chart, this is kind of looking at short-term holders supply and whether they're in profit or loss. So what that's showing us is when this is kind of all light red as opposed to dark red, which is what it is now, that means all the short-term holders of Bitcoin are in loss at the moment, right? So what that suggests, if you think about the kind of psychology, is, well, those guys are going to be looking to kind of get out of this in any sort of bounce, basically. Okay, so there might be some overhang of selling because a lot of these short-term guys are in loss, and if they can manage to get some of those losses back, they'll take them, right? So if we can bounce to 40K or even 45K, there's likely to be a bunch of these guys who are going to exit and let go of some of their exposure. Okay, so that will provide a bit of resistance to the market, given that a lot of these, or most of these guys are underwater, right? We are also starting to see quite a lot of flows back towards exchanges. So like Binance, for example, is seeing large clips coming back onto the exchange, which is likely people sort of ready to sell out in rallies as opposed to people wanting to buy. It won't be people wanting to buy because they're already bought because they're holding their coins in cold storage and they're bringing them back to exchange. Generally, they're bringing them back because they want to sell them and be able to do that quickly if you get some sort of dead cat bounce, I suspect. Okay, so because of that dynamic, I don't think you're going to see a strong, sustainable rally in the short term until that metric shows a more even balance between people who are onside and offside in the short-term cohort, and then they've got some breathing room, and then you might be able to have a more sustainable rally after that, basically, right? Now, the bottom right chart is encouraging in that it's looking at the miners' positions, and the miners' net position change remains green. So miners are not puking on this sell-off, right? If you look back at previous sell-offs, like what we saw in 2018, miners were selling aggressively, okay? They're not doing that now. Why are they not doing that now? Because they don't need to sell, because they were able to access a lot of funding to pay for the operations, right? And building out their mining operations. So a lot of these guys have just managed to get funding at decent rates that they don't need to keep liquidating Bitcoin to fund operations, right? And that's been a change that we've seen over the last year. And so that what I'm basically saying is that it's unlikely that miners are all of a sudden going to like bring a load of supply of Bitcoins to the market to be sold, because they've already taken care of their funding needs via loans or whatever it is that they've locked in. Okay, so over the short term, I don't think that's something we need to worry about too much. Okay. And the truth is, if they haven't come to sell a load of their Bitcoins down 50% from the high, they're probably not going to, basically, right? So that's another encouraging thing. Futures open interest remains high, and perpetual futures are trading with a negative basis. Okay, so we're seeing, the funding curve. If you look at all of the basis, which is the futures versus spot across all different maturity futures, and we look at where the perpetual futures trade, well, all that stuff has come in quite significantly. Okay, and that usually shows us that longs have been liquidated and the shorts are kind of in control. So a lot of the open interest. So this top chart is showing us the 30-day, 60-day, and 90-day basis, the pink, blue, and the blue lines. That has been trending down. So you see, whenever the market pukes, these lines all come down, that basis gets closer to zero, and then it bounces. So in this latest puke, we've seen it again. We've seen all those funding rates come in. We've seen the 30-day basis pretty much touch zero. And then if we look at the curve kind of shows us that the front, which is the perpetual, is at -5%. So when you see perpetual funding rates at negative, that's telling you that the shorts are there, the shorts are in control, they're in the money, they're feeling confident. The open interest that you're seeing on futures is dominated by the shorts, and therefore they are ripe to be squeezed, right? Whether they will be squeezed or not remains to be seen. It kind of depends on whether we're going to get a bullish catalyst in this market and whether macro markets are going to bounce. We don't know. No one really knows that. But, there are shorts there, which could still see some pain. So kind of look out for that, basically. All right. Now, looking to the vol markets, what are we seeing in vol? Basically, we're seeing here realized vol spiking, obviously, right? We had a crash. We're down pretty dramatically, 30-odd% in a matter of a week. So realized vol has jumped. So the blue curves have all jumped, right? So Bitcoin realized has gone from being under a week ago, under implied, which is in pink, to flipping over. It's about 20 vols over implied, and implied has obviously trended higher as well. Same thing in Ethereum. Ethereum has traded higher from around 60, 65 to around 90 in the front end. And the realized has exploded, right, to around 130. So basically, you've got about a 40 vol differential between Ethereum realized and implied. That's pretty huge, and that typically doesn't last for very long. Now, I think a big reason, and I've called it the DOV discount, is because these volts are just swamping the market with gamma. Market makers know it's coming. Even if they've taken it on the chin with a bit of realized in the last week, they're saying to themselves, well, I'm going to get supplied a load of gamma at the end of the week. So if I can just hold on for a few days, I don't need to bid the implied vol up to the moon, basically, right? So I think that's keeping a bit of a lid on the implied. If that DOV selling wasn't there, I would expect the implieds to have traded higher than they have, basically, right? Or certainly to have held their bid for longer. And what I mean by held their bid is that whilst they've pulled back to around 90 now, that front end did get higher, right? So that front end did explode a bit more. As you can see here, the curves have inverted both in Bitcoin and Ethereum. These are term structures. These are term structures now from a week on week. But if you look at the bottom charts that actually show you what the individual expiries did, you can see that, the weekly vol in Bitcoin got to around 90 and on ETH got to around 110. So that's come in by about 20 vol points from its absolute highs, basically, right? So you definitely did get a real inversion and a real spike in that vol. But obviously, since we bounced and stabilized, that front end gets smashed a quick 10, 20 vols quite fast, particularly the 1 week stuff. So we've seen that mean revert a bit, basically, right? Now, had we not got the anticipation of the DOV selling this Friday, which will sell weekly vol, I don't think that 1 week vol would have come back as dramatically and as quickly as it did. I think that's the reason. As soon as you see a little bit of a bounce and stabilization, they smash that vol quickly because they know the supply is coming, basically. Yeah. So that's kind of what we've been seeing there. In terms of SKEW, SKEW has been trading pretty extreme. We bring up the Bitcoin one, but the ETH one's pretty similar. The put SKEW went mental, as you'd expect on sell-off. You had the pink line, which is 1 week SKEW getting to as far as 20 vols for puts, very extreme. that's more extreme than even what we saw in September last year. Not quite as extreme as what we saw in the crash in the summer, which got to like 35, 40 vols, I believe, but it's pretty damn extreme. And you can see it's already gone from 20 back to 10 in the 1 week stuff. So there was a point, you know, where all of the SKEWs were trading for puts over. You've got the longer dated maturity now, the 6 months slightly for calls again. This stuff's winging around quite dramatically, but it definitely did feel like when it got to 20 vols and it was that extreme that we were looking like we were at capitulation mode, right? And that's what kind of led me to want to take some profit on some hedges, because that when that put SKEW gets that extreme, it's often a good counter indicator, basically. Yeah. Okay, so that's what we saw in SKEW, and like I said, Ethereum's pretty much telling the same story as Bitcoin is on terms of SKEW. If we now move over to the flows that we're seeing, these are the Paradigm block sniffer screens. The BTC flows, you know, you had a mixed bag. You had short dated strangles in the front 2 weeks trading. You had calls, call calendars, rolling of calls, that type of thing, particularly focused on the March 22 40K calls. So if you see here, March is the blue. Those March 40Ks are kind of your biggest clip in terms of BTC block trades. So that's what we kind of saw there. You're also seeing put protection trading, you know, between the 30K and the 38K. So you can see a fair amount of activity in all these strikes, but it's kind of mixed in terms of maturity, right? Anywhere from Jan through to March, plenty of activity there. No one sort of dominating clip. If you then go over to the Ethereum side, we can see, again, it's pretty mixed, right? Options scattered all over the place. Main themes that sort of stood out to me were call spread and call ratio buying in June. So, you know, if you're going to buy the dip in crypto, you're going to have to look longer dated now, right? Because we just don't know how long this sort of phase of correction is going to last and this macro weakness is going to last. So you kind of June almost becomes a minimum expiry for you to play longer term bullish bets. So people are looking at the 3,000, 5,000 call spreads in June. And they're also looking at call ratios like way out of the money, like the 10,000, 20,000 call ratios, right? And trading those in quite decent size. So that's kind of the bullish stuff that's happening. And then we also saw March 2000, 5,000 risk reversals trading in a decent clip as well. Probably a hedge trade, might have been an unwind of a hedge. I'm not sure which way around it was, but that was kind of the flows that we saw in Ethereum. And then the last thing is, as subscribers will know, I rolled down some of my BTC February 35 puts. So basically what happened was I was long the 40,000, 30,000 put spread in February. Back end of last week, I started to think that a crash was coming. So I said, I'll roll that put spread into double the size of the February 35 puts because the vol's quite cheap and I want explosivity to my protection rather than just a put spread that's just not going to give me that. We then got our sell-off. Those puts did explode. So to monetize those, because the SKEW had got extreme and we were getting pretty close to those downside targets near 30K, I figured I'll just roll that strike down. So I took the 35 puts and rolled them down to the 28 puts, kept them in February, not really expecting us to go there, but needing to have some crash protection on, but taking money off the table by rolling that strike down. I thought we'd probably get a bounce in markets, in broader markets into the FOMC, which is why I wanted to monetize those puts. And I may even put some puts back on or roll them back up before FOMC if we get a bounce, but I'm not sure it's happening right now, looking at equities. And like I said, it felt to me like we'd reached a bit of a peak panic, right? You look at the kind of the fear and greed index on crypto that had reached like 12, and it goes from 0 to 100 and reached 12. So again, signs of sort of capitulation and max fear. So that's what I did there. And then to be a little bit more bullish, other than just sort of taking money off the table on hedges, I added a tactical bullish trade on Ethereum, just a short-term tactical bullish trade. I bought the 4th of February, 2300, 2600 call ratio 1/2 as a way to play long delta and short vol on an upside bounce, but with limited downside. It only costs $44. So it's a pretty small premium outlay. It's got the potential to make, you know, $200-300 in a rally over the course of the next week. And the reason I picked 4th of February was because I believe that the vol in the 4th of February will be capped because of all that DOV selling, right? So that was the reason to pick it, and not really wanting to buy calls outright because vols have popped quite a lot, and you know that can be, you don't want to get into a situation where you're right about the direction of the move, but you don't make any money because the vol gets killed, right? And the theta bill that you're having to pay every day is kind of eating into your gains. That's why I chose the call ratio structure to play that tactical bounce. So far, it seems to have done all right. Fingers crossed, we'll see. I'll reevaluate it at the end of the week. If it's made me enough money, what is enough money? If it's made 3 times its value, I'll probably take it off and move on, right? But, you know, I'll reevaluate that on Friday. Anyway, that's me for this week. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.